Hi guys, welcome to another honeystocks.com weekend analysis. Now, I understand the market has a holiday on Monday. I think it's Martin Luther King Day over in the US. So, the analysis that I have for you this week is obviously from Tuesday up until Friday. Now, as I record this from my hotel room in Hong Kong at the moment, the one thing that I do want to just kind of remind everybody is the earnings season is now upon us, and it's incredibly important that you have rules in place. It's incredibly important that you don't hold through earnings blindly. Now, I have a mega popular blog on this subject. I recently built a video tutorial on how to navigate earnings season with a very specific rule set. I understand that there are many ways to play earnings. I know that those of you out there that maybe have defined risk with your options, etc., I completely accept it's a valid strategy. However, if you're out there and maybe you're buying the underlying stock and maybe you're, a little bit scared to hold through because maybe you don't have enough profit in place, maybe you don't know which way earnings is going to go, etc. I can't stress enough how important it is to have a profit buffer in place in order to hold through earnings. And like I said, I go into that in depth in one of my previous YouTube videos, so you should really check that out. I'll try and find the link and maybe post it in the description for you. But as always, please enjoy the analysis. I've got, again, 15-20 charts that I think are worth a little bit of due diligence. There's quite a few that have been requested via email, social media platforms, etc. So yeah, hopefully you get something from this, and if there's any questions, please comment below. If you want to subscribe, in the bottom right hand corner, I think there should be a little subscribe button for you, and hopefully you get something from this analysis. And thanks again, as always. So before I get into the charts, guys, you all know the drill by now. Please pause the video, make sure you're comfortable with that. There's not any investment advice. All of the information, the interpretation, it's all on you. There's absolutely no recommendations whatsoever. Please do your own due diligence, as always. Now, if this is the first time that you've come across my work, just to give myself a little bit of credibility, I'm registered with the CMT Association. I'm working my way towards my chartered status at the moment. Technical analysis is what I'm widely known for within the professional circles, and hopefully you get some insight into the market for the forthcoming week, because I know there's still a few of you out there that maybe can't get that consistency. There's a lot of you out there that just generally struggle, maybe with technical analysis, maybe with stock selection. So hopefully this helps you out in some way. Now, as I touched on previously, just regarding earnings, there are a few companies that I think you need to be aware of. I think they are earnings reports that will potentially move, in individual sectors. I think Netflix is quite a big one. I think we've got Abbott. I think that's potentially a big one. Teradyne, I think semiconductor space. P&G, another big one, Intel, American Express. So these are all earnings reports that I think you do need to be aware of, because they can have a short-term impact on the individual sectors that they are aligned with. So absolutely something to be aware of. Now, as I said before, please, bottom right-hand corner, feel free to subscribe. And if you don't know already, we do have an offer running at the moment until the 31st of January. So if you are somebody that struggles, then you might want to stick around for a minute at the end, and I will walk everybody through that one. So let's get into the charts. It's why you're all watching, and we're going to start off with the relative rotation graph. Now, a lot of you will be familiar with this because I do like to present it from time to time. Now, the rotation graph in of itself is not a standalone indicator that says we need to trade here. but what it does do is it gives us another little piece of the jigsaw. And I think when we understand that the rotation graph, when we have leading sectors, weakening sectors, we've got lagging sectors, and obviously improving. The theory behind the rotation graph is that the sector rotation, and we just constantly move in a circle. Now, as we can see at the moment, we've got utilities are starting to look a little bit stronger. We've got biotechs. They have obviously been moved into the lagging sector over the last couple of weeks. It does look like it's ready to start making another move. We've got iPay, which has been a huge performer this year. So these are all areas. Obviously tech, everybody knows tech is moving. But to the other side of that, and I'm going to be talking you through a chart that I've updated for the S&P 500. There are a couple of signals at the moment that are saying that we might want to maybe look to other areas of the market. So I think what I want to say is, with the charts that I'm going to be presenting this week, the caveat is that the market continues to take the next leg higher. I think most of us are anticipating a little bit of a pullback in the market. So if that does happen, I think all bets are off. I think we do need to be very, very mindful, manage risk closely. But when we look at the relative comparison chart, we know that semiconductors have been a massive performer this year. We know tech has been massive. As I touched on previously, iPay, which is your MasterCards, your Visas, your PayPals, they're all aligned with this ETF. We know that the S&P 500 is the benchmark, and as I touched on a second ago, XLU is starting to move as well. Now, the S&P 500, if the market is going to find some resistance, this is a level that I think is fairly logical. We're looking at the Fibonacci 161 extension of the September 2018 drop. Now, what I would say to that is, when we have the market, and I'm going to switch over to the weekly chart here, when we have the market reaching overbought conditions, we do tend to see these pullbacks. Now, this is a significant level. I would expect price to maybe chop about a little bit here. At the very least, move sideways. I mean, this has been an utterly ridiculous move over the last couple of months. Hopefully most of you have made lots and lots of profit, lots of money in the market. All good runs have to come to an end at some point, or at the very least pause a little bit. And for me, this seems like a logical level that might happen. Now, what I would say, the other side of the coin, is we've got the mid-cap index breaking out. That is not a bearish signal for the market. It is a very bullish signal. So it's a bull market, guys. We would anticipate the market over the medium to long term to absolutely keep motoring higher. But we do expect a short-term pullback. Now, that pullback doesn't mean we're going to see a correction. It could just mean a week of downside, which I think is fairly reasonable. So, on the one hand, we are expecting a pullback in the market, but on the other hand, everything's bullish at the moment. So, we should just trade with price until price tells us otherwise. That's the key message to get across. Now, the individual charts that I think you might want to focus on, a lot of you have requested this week updates on previous charts. A lot of you want to have a few new ideas. I totally get it. So we're going to start off with Starbucks at the moment. Now, Starbucks has obviously started to move. It had a couple of weeks of consolidation, and it's now starting to run. Now, the thesis is still the same. For those of you that don't know, my guys got a trade alert on this one around $82, and it's off and running. The thesis is $100. That's ultimately where I expect Starbucks to end up. And we just have to manage your trade to profit. And if you think about a trade, We're never going to pick the bottom of price. We'll never pick the top. What we need to do is just really the meat within the sandwich. That's the analogy that I like to use with my clients, and I think it resonates with most people as well. CrowdStrike, this is one that's obviously been performing very, very well. Hopefully many of you got in on this breakout, like many of our subscribers. I do think it's a little bit overextended at the moment. I would anticipate a little bit of a pullback here, but I do think any pullback represents opportunity, provided that we're above the level $60.50. Ultimately, I do see this heading towards around $69, $70 as a minimum. So yeah, I think you have to be bullish on CrowdStrike at the moment. Facebook looks like it's breaking out above $220. We have Okta. Now, Okta has obviously met resistance at a logical level of resistance. Hopefully most of you know what to do when we get these rejections. But for those of you that maybe have a longer term mindset, I think this is a level to just kind of keep an eye on with Okta. I think obviously if we get a breakout higher here above 132, I think it does go on and test those former highs at 140, but it does have to clear this level. So that's my views on Okta at the moment. Baidu is just it's moving sideways. It looks like it's maybe filled this gap here, so it's going to be interesting to see what happens. We've had a breakout. It's above the 200 period simple moving average, so I think if you're out there and you're in Baidu and you're looking to maybe allocate more money or maybe new risk, I think above $150 does make a lot of sense. CYBR, it's had a tremendous move over the last few weeks. Ultimately, again, I see this one going towards 150. Match Group, again, many of you have emailed me on this one actually, because around a month ago I highlighted this one in the weekend analysis. I know many of you are doing very, very well on stock and options on this one. I think this is a level, I think anywhere between $91 and $94. I think that's a logical level where you might want to just say thank you very much, Mr. Match, and revisit it again on any potential breakout. That's obviously the technical view. If you've got a fundamental mindset, I totally accept it, completely valid. It's not my approach. I'm very technical in my approach, as you can see from the charting. So absolutely, I think this is a logical area that you might want to consider with Match. I've had a few of you reach out about Netflix this week. I think my thesis is still the same with Netflix. That this is a stock that's chopping about sideways. I've been commenting on this triangle for what feels like months now. It's just a case of patiently waiting for a breakout in either direction. And then it becomes appealing. So I think for the moment, it doesn't make a lot of sense to allocate new risk to Netflix. I think for me, I would just be waiting to see what happens, and if we get a breakout here, that should hopefully trigger momentum and buying volume to come in. So sure, that's my view on Netflix at the moment. Again, thanks very much. A few of you have reached out regarding Etsy. Again, a couple of weeks ago, I highlighted this one as a stock you might want to consider. It's had a 16% move. This is a reevaluation point, and I think if you get a breakout above this level, again, if you're looking to allocate new risk, maybe new money, I think that's a logical level to do so. BYND has been absolutely massive over the last 10 days for many of our subscribers. Again, this was in our premium analysis last week as well, and we got the breakout above 100, had a 35% move this week. A lot of our guys were triggered out of the trade once we got this resistance, and obviously the candle wick there, but that's been a huge winner this week for BYND. it was also in my social media analysis last week as well. So congratulations to absolutely everybody that managed to get in and do well in that one. I think Apple at the moment is looking, like it doesn't want to stop. I think a lot of you are out there waiting for a pullback in Apple. I think we're obviously reached overbought conditions. I think when we get overbought conditions, it's pretty reasonable that we can expect a pullback. But there's a lot of momentum behind this move with Apple at the moment. I highlighted this breakout months ago, back in October, above 230. It's obviously been performing incredibly well since then. So I think any pullback represents opportunity. I think that's the reason why I've obviously built these lines in here. I would expect a bit of a pullback, but ultimately, if the market continues to trend higher, I don't see Apple being left behind unless there's obviously something that comes out with regard to earnings, etc. But it wouldn't surprise me in the slightest to see this at 380. Funko, again, patient waiting game, potential cup and handle pattern developing here. Some of you that are aggressive may wish or to allocate risk early, but I think for me it makes a lot of sense to wait for any potential breakout here, to allocate any new money to Funko. KKR has broken out this week. I think this one warrants quite a lot of due diligence. I think the breakout really speaks for itself. I mean, that's a great move over a couple of days there. So I think KKR, definitely do some due diligence on that one, guys. Pinterest is fast approaching an evaluation point. Where you may want to consider saying thank you very much and waiting to see whether you get a breakout here. As we can see, that this has had a monster move over the last 10 days. Moves like that, they don't continue forever. So I would expect, given that we've got overbought conditions, I would expect a little bit of resistance here. But naturally, if we get a breakout here, then that's obviously another bullish signal for Pinterest. But I'd be watching this level around $25 with a lot of interest at the moment. I think with Amazon, very, very straightforward. I think we are in a sideways grind at the moment. That hasn't changed. I think for me, I get asked about Amazon a lot. Emails, social media messages. I think for me, with the way the chart is, I don't see Amazon being left behind if the market continues higher. I mean, I'm very much on the record with that. I've used those words many, many times over the last few months. But it is grinding sideways at the moment. I think for me, for it to offer any kind of risk to reward, I'd be looking for a breakout above $2,000. I think if we can break out of a near 2-year base with Amazon, then be as bullish as you like. But I think for me at the moment, I think Amazon isn't massively appealing. Above $2,000 though, I do like it because we're kind of removing the chance of it chopping about sideways. And the last thing you want as a trader or an investor is to be holding a stock and for it to just do nothing for a year, 2 years. It's a complete waste of everybody's time unless you're obviously playing the dividend game. But I think $2,000 I think makes a lot of sense. Twitter is off and running. I haven't updated this on my website yet, but this is actually one of our recent trade alerts that was sent out to our clients and subscribers last week. It's obviously off and running. I think it's logical that we keep an eye on around $36. We do have a flat 200 period simple moving average, which isn't great. So I'll be watching that level with a lot of interest. I think if we get a breakout above that level, I think that would be a catalyst for any new money to be allocated. But I think for Twitter, if you're out there, I think we can be bullish. We are making a series of higher lows, which is a characteristic of an uptrend. So, absolutely Twitter, I think you can be bullish at the moment. Team reports earnings this week. Now, this is going to be a big move, I think, for the software space, tech space. Now, what I would urge you to do with this particular stock, this stock has what's the word I'm looking for here? It's very, very common for this stock to report positive earnings and for us to get a decline overnight. Now, I talk about this within our earnings strategies, and when we have good earnings followed by a decline the following day, that quite oftentimes represents opportunity, and it's really just about identifying where the optimal entries are if that happens. And this stock in particular is notorious for positive earnings followed by a decline and then a complete rebound within a few days. So I think that's going to be an interesting one to watch for earnings this week. So if it's not on your radar, then absolutely pay attention to the earnings report and the subsequent price action that we get. Now, Goldman Sachs looks like it's starting to move. It reported earnings last week. Earnings were fine, nothing massively concerning at all, in my opinion. And it looks like we're starting to move through the levels here. I think above $250. Again, for those of you that don't know, my guys got a trade alert on this one around $222, I think it was, and we're off and running, and it's up towards $250. So I do expect this, if we get a breakout in financials, I would expect this to start to move towards 275, but we'll wait and see how the market reacts next week, whether we see any kind of declines whatsoever. We've got Wynn Resorts. Absolutely monster breakout occurred back in December on this one. Since then, obviously, it's a stock that's very much aligned with the price movements of China. Obviously, Chinese stocks have had a bit of a resurgence of late, and Wynn Resorts is one of those. It looks like it's wanting to break out here above 150, and I think if we get a breakout above that, ultimately, when stocks are in uptrends, they tend to move higher. That's not rocket science, and you could probably expect that to start to move towards 200 over time. I think all you need to do is manage your risk and obviously manage to profit. EHTH had a significant bounce from a logical level of support last week. It's off and running. I think this $100 barrier is something to pay attention to, but ultimately what we do know is the more times a level is tested, the more likely it is to break. So ultimately, if we go on and keep testing $100, it is going to eventually move through and start to go back and test those former highs at around 110. United Rentals is found support last week. I think what we have to understand, when we have a good stock, we've got good uptrends, etc. Sometimes those trends like to pause and they offer us opportunity to extract profits, etc. But when we have a good uptrend on a good stock that declines, that decline, like I've said before many times, offers opportunity most of the time. So it's really just about identifying on the chart in advance where those support levels are for you to be able to take advantage of any potential bounce followed by continuation. That's something that we've seen this week with URI. So if you're out there in URI, I'd be watching this level around 170 with a lot of interest. American Waterworks. Now, I touched on utilities at the start here. Now, I think with utilities, we obviously understand that they are starting to move. Now, utilities are generally seen as a bit of a defensive play in the market. So the fact that we've had a 5% move in one of the biggest utility stocks, obviously American Waterworks, I'm keeping an eye on this just in general, just to see what areas of the market are moving. Because if we do see declines in, the broader market, tech, financials, software, those types of areas, we need to pay attention to what other areas are starting to move. So I'm going to be keeping quite a close eye, I think, on utilities and stocks like American Waterworks over the next week or so, because that can quite often give us clues as to what is likely to happen next in the broader market. So I think with AWK, the message would be, keep an eye on it. And also, Yeti Holdings, I think this makes a lot of sense. If we get a breakout above this level around 36.50, that resistance will have dated back, I think 9-10 months or so. It is in a bit of a choppy uptrend. We could look at it as an ascending triangle pattern. So, I think at the moment, absolutely add Yeti Holdings to your radar. We're only a couple of dollars away from a potential breakout there, and I think that would absolutely be a bullish move for the stock. So that's one that I think you might want to really just keep an eye on, I suppose. Now, that's, I suppose, the analysis when we talk about the charting. Now, I touched on it at the start. Maybe, some of you out there maybe struggle with your trading. Maybe some of you struggle with technical analysis. Maybe some of you struggle with chart building. Maybe some of you struggle with, stock selection, etc. What we do at honeystocks.com is we've got an offer running at the moment up until the 31st of January. Now, what we offer with our service at honeystocks.com is we offer 1 year access to all our trading ideas, our scans, our premium weekend analysis. What you're currently watching at the moment is our free content that we put out to social media every week or two. And what I also do is a premium analysis, which is for our members only, which highlights usually 10 to 12 of the best charts with sectors that I don't necessarily talk about in our free generic analysis. So I just want to make that distinction, because I think I get a lot of emails asking me what the difference is, and I think the trade ideas, which I'll walk through in a second, probably speak louder than most. But this is what we do. We've got 1 year access to our trading community, which is just an incredible place. Beautiful, incredible traders, great people, educated people. It's not a chat room where everybody's an idiot. We're very, very well thought out. We're methodical. It's one of the reasons why I have an annual subscription and I don't offer monthly subscriptions. It helps me to filter out the types of day traders, etc., that I just don't want to have as part of the group, because I don't have a day trading style. My time horizon for my trades for our analysis is generally weeks, sometimes months. So that's one of the reasons why I have an annual subscription and I don't offer a monthly subscription. Add in the fact that monthly subscriptions are just notoriously horrific for management, chasing up missed payments for people that can't afford it, etc. So I'm asked all the time why I don't offer a monthly subscription. That's the reason why we only offer annual subscriptions. It attracts the right people. So with that said, if you don't know who I am, as I said before, and obviously I introduced myself at the start, I'm Sam and registered with the CMT Association, working my way towards my chartered status at the moment. I also have my website, honeystocks.com. Most of you know it very, very well. And obviously, a lot of you don't really understand the trade ideas aspect of things and what it is that I actually do. But I'm very unique in what I do. I don't know anybody else that does it. And if anybody else knows anybody that does this, please comment below and let me know. But with every single trade idea that I post to my clients and my subscribers, I log them all on my website for complete and open transparency. I have a code of ethics that I need to follow with the CMT Association. And one of the things that I like to do is I want everybody to see the types of stocks. I want everybody to see this, the price that I'm recommending, and what those stocks have then gone on to do, because it will help you to make a judgment as to whether or not we are the best fit for you. And you can go on and have a look at 2018, 2019, and see exactly what it is that I've done for my clients and subscribers. It's been massive over the last 2 years. This is what a trade alert looks like. This is a typical trade alert, very, very specific. This is for Nike. We had a breakout, logical target. I think we're up at around 104, 105 now, but that's absolutely moving, still moving. We've got a trade alert here for Starbucks. Again, as I touched on before, it's still off and running. If you had traded options on it, that's insanely profitable. I also provide bespoke charting requests. So, let's say, for example, you're stuck on a position. Maybe you're unsure about the technical analysis. You will learn how to build charts yourself, because as part of our offer at the moment, we are providing full access to our technical analysis program, which we charge a lot of money for. But this is what I do. I mean, I think this is up at $60, $65 at the moment. ENPH, again, I think we're up at $32, $33 with this one. This is another trade alert that we've sent out to our clients. So if you're out there and maybe you are struggling a little bit, maybe you're trying to fit trading around a career or a business, maybe you want to get away from day trading, maybe you want better consistency, maybe you want to learn this stuff for yourself and you've just had enough of hunting around YouTube, and maybe you want to accelerate your learning curve, etc., and trade with minimal stress, we can probably help you in some way. Because I know what it's like hunting around YouTube. You could spend a couple of years, and during that time, the cost of tuition is paid through losses, and that's the biggest thing that we probably do at honeystocks.com is with our program. If you want to learn a logical approach to the market, we can oftentimes help you to bypass this step in the learning process. And I think you've probably watched this and you understand that it's a very logical approach to the market. You maybe don't know why it's logical. Obviously, I've got a style of presenting. I've got a very unique style of charting as well. Very, very clean, very easy on the eye. But there is a little bit more going on in the background that you need to be aware of. So if you are open to maybe learning a new way, maybe you're sick of doing it the old way, please feel free to register your details below. Like I said before, we don't overcomplicate things at honeystocks.com, and we've helped clients across 20 plus countries. We're based all over the world now, and it really is an incredible place to be. So please don't sit there and suffer. If you are struggling, feel free to hunt around our website, check everything out, and if you feel like you would like to register your details, and if you feel like we are a good fit for you, feel free to register your information, and we will get in touch with you as soon as possible. So that's the analysis for this weekend, guys. Please enjoy Monday off. I am going to go and enjoy Hong Kong for the next few days, I think, before I fly over to Singapore. And hopefully we can welcome you soon. Thanks as always.